Thank you for tuning in to this earnings conversation with the management of Marico. The numbers, both profit and revenue growth were lower than estimates. Stable input costs aided margins, while volume growth increased 4%. I have with me Mr. Saugata Gupta, the company's MD and CEO, to walk us through its quarter 3 earnings, as well as to give us guidance on the way ahead for the company. Thank you so much, sir, for joining in. So as we see that, the weak rural demand and the sluggishness in the mass personal care continue to be a pain point in Q3, which is reflected in the earnings as well. I would like to know, how do you see things going ahead from here on?
So if you look at our portfolio or even the sector in general, I think a significant portion of the sluggishness in rural demand was due to the fact that there has been a huge inflation. That inflation there are two components of the inflation. One is food inflation, and the fact that because of high input costs, a lot of HPC products had taken significant price increases. I think both led to the fact that there was a little bit of a downtrading or titrating of FMCG consumption, especially in rural. I think the worst is over as far as inflation is concerned. I'm sure, for just like we have taken some price drops in Parachute by passing down the value to consumers. I think most of the vegetable oils, and also therefore, in both Parachute and Saffola, we have taken price drops. I'm sure similarly, there will be actions by other players also. And as a result, what we are seeing is that with the lower input costs and lower food inflation, there will be some kind of a reversal, which we are seeing the first signs of. I think it will be a gradual recovery. The government continues to take steps to boost rural consumption and investment behind rural infrastructure. So I think the worst is over. What we should see going Q4 and then Q1, Q2 subsequently is gradual improvement. And therefore, that will translate definitely for us an improvement in both volume growth rates and also earnings growth.
Right, sir. So my understanding is also that the rural versus urban gap has widened due to inflation, as well as down trading and things like that. So what will it take to revert this mix going forward?
So I think the biggest differential will be the inflation, because I think while urban has been because of a continued growth, especially in the top of the pyramid and the middle of pyramid. I think the bottom of pyramid, where there was some additional stress. And I think the factors that was driving the stress are much lower right now. And unless there is any more black swan event that impacts commodity costs, and the fact that I think in terms of, as I said, that the crop yields or some of the steps which the government is taking to boost rural consumption is in place, I think we are pretty hopeful about the reversal, and we are seeing some early signs, but I guess it will take some time.
Right, sir. So talking about your international business, currency depreciation has been a major headwind there. So tell us a little bit about the international business, how it has been and how it is looking like currently.
I think if you look at our international business, it's a standout as far as we are concerned in terms of consistently delivering double-digit constant currency growth. Even this quarter, it was close to double-digit, except because of certain issues in one of the countries. I think our business is resilient because it's based on strong fundamentals and market leadership in most of the markets. One section, yes, some of the countries in the international business are facing both currency and inflation headwinds. We see that continuing for some time, but I think as things stand, we are pretty confident about delivering double-digit constant currency growth in our international business.
Right, sir. So in terms of the channels, the sales channels, the general trade is also seeing a decline. So what is exactly the reason that is dragging down the sales decline in the general trade? And also, what about the e-commerce sales, how it is looking like?
If you look at it, I think general trade will recover once this stability happens on pricing. I also believe that there are significant transformation that is happening, whether it's in general trade or the traditional distribution system in India. Now, e-com obviously had got a significant fillip, especially during COVID. I think 3 years growth got compressed within 1 year. It's getting back into a certain growth, which is definitely ahead of what I call the overall growth in the market, but the growth rates are coming down a little bit. But that will now stabilize to a long-term to medium-term to long-term growth. I think there's been a significant recovery in brick and mortar organized retail because it had got impacted during COVID. And therefore, the other interesting thing is a result of this, you will see that urban continues to grow in spite of all the issues, urban FMCG category especially, and also the fact that one of the, categories, especially food, given the fact that the food penetration, packaged food penetration in India is very low, and therefore food has continued to grow, and it will be one of the big drivers of growth in the future. So I would think that, yes, I think somewhere general trade in India will be resilient. And let me tell you something, I think the general trade, people who run general trade are one of the smartest in the world. And therefore, I think we should not, it is not going to follow a trend as it has, what you see in the Western countries or Southeast Asia. No way.
Right, sir. So if I look at Marico's portfolio, you have a bigger thirst on the digital first brands. How aggressive are you for these brands, and how are they performing?
It's very much on track. I think we are, having said that, I think now that it has got some scale, we are now going to focus on, far more strongly on our path to profitability. And the very fact that we have a host of brands that gives us enough opportunities for driving synergies. And I think we will continue to look out for more acquisitions. We firmly believe that Marico is a strategic investor of choice for a lot of founders who have the mindset of building to last and leave a legacy.
Right, sir. So also in terms of your advertising and promotion, are you looking to step up your advertising and promotion expenses, given that now that you have some kind of a relaxation in terms of input cost stabilization? So that way, are you looking to ramp up spending?
We, as a matter of fact, we hadn't been using A&P as a tool to manage margins. If you see, we haven't taken significant cuts in A&P. Yes, we haven't grown our A&P because of a lot of spend effectiveness and the fact that the overall share of voice in the sector has been, and to maintain the share of voice, overall noise levels had gone down a bit during COVID. I think, yes, we will ramp up A&P in line, and especially the fact that now that input costs are coming down, that will give us relief in terms of, because ultimately at the end of the day, A&P and effective spend of A&P is a big driver of maintaining long-term equity and long-term growth agenda.
Right, sir. So, okay, I think that sums up pretty much everything that I wanted to ask, but I would like to know what's your outlook for the fourth quarter?
As I had said, that I think we believe that both the volume growth and earnings growth will improve gradually, and that should go on even quarter 4 and beyond.
Right, sir. All right. Thank you so much for talking to us at BQ Prime.
Thank you.